Hello guys, welcome to my first recorded video. Here in this video we are going to discuss how to build the OI lines, which I keep sharing almost on a daily basis. So for example, you can see here I've drawn these lines which might at the outset look like random lines drawn, but they do work magically, and the fact of the matter is that there's no magic to it. What these lines represent are the important levels where the general sentiment of the market is, and our objective as traders should be not with the general sentiment of the market, but our view should be contrarian to the market. Now let's try to draw the lines in Nifty, and then we would explain you on how to trade on these levels. Now we open the 15 minutes chart of Nifty. The first thing before drawing any lines is to build the volume profile analytics, where you use this fixed range volume profile, go to the last 3 days, so let's say from 17th August, which is this 17th August, till your 19th of August range, last 3 days, and then you get a volume profile analytics. Now what this shows is nothing but what is that particular zone in which we have maximum of the hands being exchanged, where the maximum volume was being exchanged. So first we take this as you can visibly see that there is this particular zone wherein you have the maximum open interest, or not open interest, the maximum volumes being exchanged. So you just mark this level, which is equivalent to the breadth of this volume bars here, and then you just mark them as volume profile. Now the next step is going to the open interest chart. So in Sensible, this is a great tool. You don't need to see this OI change. OI change for a Nifty weekly expiry or a Bank Nifty weekly expiry means how people are changing their stances on a day-to-day basis. It's good for intraday, but we're talking more of an intraday compositional. So we go and check our absolute open interest levels. So as you can see that the Nifty spot is right here. The green bar is the put OI, the red bar is the call OI. Now you can visibly see that the nearest support where the maximum calls are being written are 17,700 levels, which is here. So we just go here and mark the 17,700 level, which is here. However, as you know that the spot can move up and down based on your intraday volatility, right? So we'll take, let's say, 10 points above for Nifty, which is 17,710 and 17,690, so 10 points below. So this is how we mark our first support level of Nifty. This is actually not the support level, this is the level wherein you have to observe the price action and then act. The next support which shows here is 17,600 and then 17,500. So let's mark those two also. 17,600, that means 17,620 to 17,590, yeah, and you just drag it down to 610. Yes, so this is our next support level. Then the next support level is 17,500. Then we go here, let's just zoom in. Okay, so 17,510 is your first is your next support level. So you marked 17,500, 10 points above and 10 points below, just to make sure that you guys understand. Why I do so is because there is no such thing as a single line in the market, it's always a zone. So it's better to get more confirmation and then act. Then let's mark the first few resistances also. So the nearest resistance you see here is 17,800. So let's just go and put that as a resistance level, 17,810 to 17,900 17,790. So this becomes our first resistance level. Okay, let's check. The next resistance level is at 17,900. These are visibly huge resistance levels, right, wherein majority of the people think that the market shouldn't go above these levels. So 17,900 becomes our next resistance. So 17,910 to 17,890. Okay, so now what this zone shows us that this is a huge resistance, wherein a lot of people have written calls here, and these volume profile shows that obviously there have been a lot of exchanges of hands here, and then the price confirms that these exchanges were for lowering the prices, hence this is also a resistance level. So this is a huge resistance zone which you see here, and let's mark just one more resistance level, which is 18,000. Okay, so then our next resistance level becomes 18,010 to 17,990. Okay, so now we are done. Actually, now let's build a trading plan for tomorrow. Now, as traders, the most important thing which we need to do is we have to be absolutely neutral, whether the market gaps up or gaps down or opens flat. We have to mark and act against these levels. So now let's say if the markets open somewhere here and it crosses this level, that means all of these put writers, they would start getting in loss. So if the market sustains for 15 minutes below this level, and if these put writers start winding up their positions, that means they would start buying puts, and if there's a huge put buying happening in an instrument, that tends to lower the price of that instrument, and hence you could see a huge move down till the next support. So that's how I write my first statement, which is short below 17,690, short below 17,690 for target 1 which is our 17,600, and target 2 is 17,500. So this becomes our first trading plan for tomorrow. Now you know that this is a huge resistance, this is a huge support. Between this particular area, naturally people would be super confused. Hence what we generally do here is, let me just mark this in white, yeah, and yeah, this is a no trading volatility area. Here, I mean, you can take trades, you can probably be right, but I generally tend to protect my capital, and I would advise you guys also to do so. So hence you don't trade in this area. Now once it breaks this area that means that you go long above 17,810, long above 17,810 for target 1, which is your 17,900, and target 2 is your this level, which is your 17,940, and target 3, if the markets are really blissful tomorrow, then we might see a level of 18,000. Yeah, so now what you need to do tomorrow is just to wait and observe. The moment the prices go here and sustain below this level, that means these guys, the put writers, would be in a loss and they would start winding up their position. And if you see a range breakout here or a shooting star or any of a reversal candle pattern, right, then you can immediately short here by putting this upper range as your stop loss. And then when it comes here, then you need not necessarily book profits, because it could be the case that the market sustains here and then falls again below. So then you need to wait here and observe the price pattern. How does reversal happen? It could either happen by creating a double bottom chart, or it could show a bullish engulfing pattern, etc. I assume that you guys all know the basics of candlesticks, and then you take a decision accordingly of booking your profits or keeping on. What I generally do is I go short here, I wait here and if it continues the downtrend, I would add more shorts here and bring my stop loss till here, and then I would book my profits here, so that with a smaller risk I can add 2x my quantities and generate more profits. So I hope this video was helpful to you guys. If you have any questions, please feel free to drop your comments, or you guys can also DM me on Twitter and I would be happy to clarify. And you can also use this chart tomorrow to observe and then start building your own confidence and then start trading on it. And you can trade either way. You can either buy options or sell options, like it's completely up to you guys. If you want to short future, buy future, it all depends on your risk, your capital and all of this. My objective is to train you guys to actually start doing data driven analytics, because I'm a huge fan of it. I've been consistently showing on my Twitter handle how beautifully this works, and I hope this would be helpful to you guys. And if you like this, please retweet this tweet, so that majority of the people could get this amazing knowledge of data driven analytics absolutely for free. Thank you so much.